Welcome to Charts Today. My name is David Linton, and today's edition for Thursday, the 22nd of September, comes to you from London. And the big news, of course, is the Federal Reserve raised interest rates by 0.75% yesterday, and that's had an impact. We're seeing a lot of red on the screen, and we're waiting now in the UK for a similar interest rate decision this week as well. So the dollar, there's the weekly candle, the daily candles here, and we see on the 60-minute chart the rises through yesterday, a little bit of a fall away, and then that big move up and a push higher. And so the dollar continues to be bullish. We've been bullish the dollar all year. In fact, quite some time we've been bullish on the dollar, and that cross on the weekly cloud that's the trend that we're in. This is the long term, the medium term, and the short term view of the market with the corresponding point figure targets, and we do have targets much higher. So this move in the dollar is not yet done. That means that the euro is now below 99 cents and touched almost 98 cents. Remember, we gave a target back in February for 97 cents, and so that's really where we're headed, and we've got targets much, much lower, so not great news for the euro. Against the yen, of course, the dollar is higher still, pushing to decades highs, and then looking at sterling, we're seeing the lowest levels against the dollar for 35 years. So really now just sinking lower all the time with these downside targets. So really quite key. Sterling against the euro, sitting at 114. Just looking a little bit better. All eyes will be on interest rates on Friday, and then what the European Union does. But looking at Bitcoin, we're sitting at 18,800. It's game over for crypto. And then if we look at the S&P 500 index, of course, the market reaction, we saw the sell-off in the last hour last night, and we are now just nudging below the cloud on the lagging line on the weekly, putting us very much into bearish territory. If we spend 3 weeks below here, then we are in a new long-term bear trend. But we have been bearish for quite some time on the market because we've got these downside targets, and of course if we make new lows we lose the upside target there, and we've got targets pointing to some 13% lower, so it's really not looking great, and that low that we saw back in June looks really now under pressure. The Nasdaq was similarly lower yesterday, again the sell-off in the last hour, and if we look at the futures today, we're down further. So the fact is we're not going to recover that fall yesterday. We've got the market just pushing lower still, and the Nasdaq mini is also lower. The VIX volatility strangely hasn't broken the 30 level, the fear index, but we are seeing that rise, that steady rise there in the trend in the medium term, and we're just seeing a gradual change in the VIX, and we've got upside targets into the high 30s, so it does look like we're going there. And then looking at the FTSE future, down 0.75% this morning, the DAX in Germany down a further 1%. Already just starting to nudge new nose, a descending triangle there on the DAX, really quite clear there, and we are, of course, the move on the descending triangle is the height of the triangle, so that puts us down here. We've got targets some 13, 16, 17, 18% lower, so it's really looking pretty grim for German equities. The CAC Kront down similarly, Japan was down, the Hang Seng down nearly 2%, and the Indian market, which has been on the verge of trying to activate this upside target, now falling back, giving us a new, this is the Chinese market, the Sensex, so the Chinese market downside target, the Sensex just trying to activate this upside target, but failing, needs to break that 60,000 level really to do that. And then the Aussie market down 1.5% as well, so it's just really falls across the board. No big surprises there. Crude oil price up this morning. We were neutral on Brent in our morning report to clients. WTI we are seeing is looking a little bit more bearish. US nat gas also lower, and so that's quite significant. We'll look at these markets in a bit more detail in a moment. Wheat is up slightly, and gold is just struggling. The stronger dollar having a little bit of an impact there. Gold is down, silver is down as well. Silver well below $20 is not looking great. And then if we look at yields, of course, the 10-year yield now sitting at 3.54%. The really key thing is we've got a new column building here, which is going to give us a new upside target. The stock to watch globally is Apple, the biggest constituent in the US, and really the bellwether for what's happening. And if we see Apple breaking below those that low in the 130 mark, then that is game over for Apple as well. We have got downside targets. So really, and the pattern of making lower highs and lower lows is there. So we're just going to watch that. Taking a look at the energy mix quickly, we talked about crude oil, US nat gas. It's just below the cloud here. We've gone out as bearish to clients this morning. Coal actually just holding steady, less liquid, of course, so we're seeing less trading here, but holding the daily trend there. Emissions, we were bearish today. We've got very clear targets on the 1 minute to the downside. And gas, we saw a mixed picture. In fact, we were TTF, we were neutral, and MBP, we were bearish today. So that's really quite key as well. And last but all, looking at German power, we're holding the 500 mark, so just in that trading range. Watch for a move below 500. That's it for today. Until tomorrow, happy charting. See you then.